Hello all, welcome to BISP Solutions. Today I will tell you about seeded consolidation rules in FCCs. So, seeded consolidation rule sets are designed to provide the starting point for the consolidation requirement. They are sample rule sets designed to meet general consolidation requirement. In FCCs, there are 9 seeded consolidation rules in the application, and these rules are available if we enable ownership management at the time of application creation. Besides these, there are additional 4 rule sets if equity pickup is enabled. I have listed in the screen the 9 consolidation seeded rule sets. The first 6 rule sets provide adjustment or elimination entries between the investment of a holding company in a subsidiary and the owner's equity of the owned company. The PP or prior period rule sets apply the required logic to unconsolidated prior period investments in the opening balance. There is a prerequisite for all these rule sets to function, and that is all base entities must be designated as intercompany entities. These rule sets use the intercompany dimension to track the legal entity to which elimination entries are related. The data entered for investment in subsidiaries in the holding company must include an intercompany dimension entry that identifies the owned entity. So the first rule set is investment rule set. Investment rule set transfers current period investment to goodwill for all intercompany partners. It consists of 2 rules: investment reverse proportionalize and investment goodwill offset. The goodwill entry will offset with the elimination of owner's equity from the subsidiary. And the investment amount will be reversed in the subsidiary entity. Next is investment PP rule set. This transfers prior period investment to goodwill for all intercompany partners representing siblings. It consists of 2 rules: investment prior period reverse proportionalize and investment prior period goodwill offset. So the prior period investment will be reversed and the goodwill entry will offset, leaving a net goodwill value. Then we have owner's equity, subsidiary or proportional method rule set. So this rule will be applied on subsidiary or proportional method of consolidation. Subsidiary means where the ownership percentage is between 50 to 100%. More than 50% ownership, then it is called subsidiary consolidation. And proportional is when there is a set amount of consolidation percentage which has to be proportionalized. This rule set applies the current period ownership percentage and minority interest percentage to the current period owner's equity changes, excluding retained earnings and other reserves. So, the percentage of equity will be distributed with the help of this rule set. It will not take the effect of retained earnings or any other reserves. The rule set consists of 3 rules, which is owner's equity reverse proportionalize, goodwill offset and minority interest. Next is owner's equity, subsidiary or proportional method of consolidation, PP rule set, prior period. This applies an ownership change to the owner's equity accumulated from prior period, that is, which is carried forward in the opening balance. It assumes that the owned company is an ongoing entity and only ownership relationship has changed. So the prior period owner's equity should be eliminated to the extent the ownership percentage has changed from prior period. The rule set consists of 4 rules: reverse proportionalize, goodwill offset increase or decrease, and minority interest. Next is owner's equity rule set. This is applied on equity method of consolidation, that is where the ownership percentage is between 20 to 50%. It applies the current period ownership percentage to the current period owner's equity, excluding retained earnings and any other reserves. So it is similar treatment as in owner's equity, subsidiary or proportional one, but there is a change that it recognizes investment in equity companies. So there is no reverse proportionalization because the consolidation percentage is 0. It does not rely on any intercompany data to execute. It consists of 2 rules: goodwill offset and investment in equity company. Next is owner's equity method of consolidation for prior period rule set. This This applies on ownership change to the owner's equity accumulated to the end of the prior period. It consists of two rules: goodwill offset and investment in equity companies. Next, owner's equity holding rule set. So this will apply on the holding entity. It applies the legal company entity name as intercompany partner entry for owner's equity account. Here, owner's equity of a holding company does not eliminate. It consists of two rules: reverse proportionalize and proportionalize with ICP. Next is net income subsidiary rule set. This splits post-acquisition income of subsidiary between owner share and minority interest share. Minority interest share goes to minority interest equity account, and the unadjusted remainder of net income is aggregated to owner's income. The rule set consists of two rules: minority interest net income and minority interest. Then it is net income equity rule set. So this will record the ongoing post-acquisition income of the equity method company. So when we have equity method of consolidation, the rule set will be applied. It consists of two rules: equity company income and investment in equity company income. Now we will go to the scenario and we will see how the consolidation will be done when these rules are applied individually one by one. So I have created this input sheet where I have taken few of the accounts of the from the trial balance. I have bank account and machinery in asset side. Then in liabilities I have taken payable to bank and I have equity. Then I have taken revenue and investment in subsidiary account. Legal 1 is my holding entity and legal 2 is the subsidiary. Legal 1 owns 80% of legal 2. So I'll input the data. So legal 1 has invested 10,000 in legal 2 at 80% ownership. We'll submit this data. let's go to the application, and here I will show you the 9 seated consolidation rules. Under configurable consolidation, these rules which I just explained, all of them individually are there, and I haven't deployed them yet. So none of the rules are deployed, and now we will do the consolidation without deploying and see what is the result. So we will give the ownership structure first. Console 01 is my parent entity. I will choose this. Legal 1 is the holding entity, and legal 2, it has 80% ownership of legal 2. So this I have given the ownership structure. We'll save it. And now I will go to rules and run the rule of consolidation. So I filled the required POV entity. The parent entity is console 01. My period is January. Scenario actual year FY 15. We will click launch. And then we will go to jobs to see the consolidation process status. It is processing. We'll refresh it. So now it is completed. So I will go to my smart sheet, and here I have created one output to sheet where I have taken the POV as all parent members. Okay, now this is my holding entity, and legal 1 is my holding entity, and this is my console 01 is my parent entity. I have taken subsidiary also. Then further I have taken legal 1, which is holding at proportion, elimination and contribution members. Similarly, we have taken the same members for my subsidiary entity. Okay, now we will refresh the sheet. So if you see, there is no calculation of goodwill, and investment in subsidiary is also not been eliminated, minority interest also not calculated. So right now, without any of the rules deployed, we are just getting the total of the assets, and this is due to the fact of these have been submitted on the base level, and they have aggregated, rolled up on the parent level. So only the assets and liabilities are getting added up. Further, there is no change. We are not getting any figures in the elimination member. Okay, now we will deploy the first rule, and let's see what is the result after consolidation. So here in the consolidation, we'll go to configurable consolidation, and we will deploy investment rule set. Okay, now we will again run the rule of consolidation. POV is already been selected. Now we will just launch it. Okay, so now we can go to our Excel output sheet, smart view sheet, and here now that you have seen what is the result when none of the rules been applied, I have created another sheet. When I refresh the sheet, now you see that the investment in subsidiary has been eliminated. This is what's supposed to be happening. You can see in legal 1, which is holding, subsidiary investment in subsidiary is getting eliminated. And the entire figure is coming to the goodwill offset. So after deploying the investment rule, we get the elimination of investment from the consolidated balance sheet, and we get our goodwill calculated with the effect of investment. But still we are not getting correct goodwill, we are not getting minority interest, and the retained earning figure is even not correct. So now we will go to the application and deploy the second rule. So we have done investment prior period, we have deployed it. Now we will deploy all the owner's equity rule, owner's equity subsidiary, proportional prior period, owner's equity method, and owner's equity for the holding entity. We will deploy them, and we will again run the rule of consolidation. So the POV is already set, we have to just launch it. We will go to jobs and see the status. So now consolidation is completed. I have created a second sheet because in the first sheet I have shown you what happens when the investment rules is deployed. In the second sheet, I will refresh it first. This is when the owner's equity rule sets have been deployed. So now the calculation of goodwill is correct. The effect of owner's equity, this 5,000 is been taking effect, and now we are getting correct goodwill. Also minority interest, we are getting some figure in minority interest. This is, as you can see, this is just the 20% minority. We have 80% ownership, so the left 20% is of minority. So this 20% of only owner's equity has been taken effect. So our minority interest figure is still needs to be rectified, and retained earning, this figure also needs to be calculated. Further, I will show you the elimination. So this is the common stock of subsidiary this is getting eliminated. Equity of subsidiary is getting eliminated. And the goodwill figure is being calculated correctly, and 4,000 is getting eliminated. Now we will go to the application, and the last rule set of net profit, we will now deploy that. Net income for subsidiary method, net income for equity method. I will deploy them. And we have to run the rule of consolidation again. Since the POV is already entered, I will just launch this. Okay, now we will go to the Smart View sheet and I will refresh the newly created sheet. Now we find that it is correctly calculating minority interest, which is supposed to be 20% of 5,000 and 20% of 2,000, which is equal to 1,400. Further, retained earning, that is 8,000 plus 80% of 2,000, so which is 9,600. So with the net income rule set, when we deployed it, we are getting the correct figures of minority interest and retained earnings. If you see here in the elimination, this is the elimination of the subsidiary entity. The consolidated adjustment and elimination data for legal entity 2 is generated and it is stored here. And in this proportion member in both the holding entity and the subsidiary, the proportionalized value of the entity total and parent total member is exactly coming. And if we see contribution member here in both the entities, legal 1 and legal 2, it is including the aggregation of proportion data and elimination data. So if you see in the proportion I have 5,000, it is getting eliminated and their aggregation is coming on contribution. So these seeded consolidation rules are basically sample rule sets to meet the very basic and general consolidation requirements. You can deploy them as they are, or you can modify to suit your needs. So I hope the topic was clear to you. For more videos, you may log on to our website www.bispsolutions.com.